to get something. I keep telling my team, you don't have to build Taj Mahal in day one. I mean, even, we're building some digital products. And I was telling my tech team, it doesn't have to be perfect on day one. It fundamentally will not be perfect on day one. It's not a monument, right? It's a work in progress. So that's something I keep telling. It's important to ship. I started my career as a coder / technology person. It's important to ship one version. I mean, just as when you're writing, it's important to write one version because then it takes a life of its own. But if you don't write one version, then nothing moves.
Welcome to another episode of Insider Investing. Today we have a very special guest. She's admired and has broken many norms with her unconventional leadership. She's the youngest AMC CEO in India and among the top 30 most powerful women in Indian business. She's a young global citizen, having grown up across 4 continents. She's a keen storyteller, a bridge player, a Twitter blogger. Her YouTube videos have garnered over 100,000 views in a short span of time. Please welcome Radhika Gupta, MD and CEO at Edelweiss AMC. Hi, Radhika, and thank you for doing this for Insider Investing. Super thrilled to have you on the show.
Thanks, Sandeep. Thank you for having me.
So, Radhika, when I was, talking to you earlier, one big thing stuck out to me, which is the fact that how different your journey is from mine. I have been, after B School, worked with IFL for almost 15 years. And then started up. You had a very different journey. You started up first, ran Forefront for 5 years, and now 7 or 8 years maybe with Edelweiss.
Yeah, 8 years. 8 years. 7.5. Yeah, 8.
Wow. So how is it turning entrepreneur to a professional, or is it still very much the same?
It's an interesting question, Sandeep. When I did the move from entrepreneurship to, and you realize I was very young when I did entrepreneurship, right? So at 23, 24, you don't even have any idea of what is going on, right? So, but when I did the move and when we sold the business to Edelweiss, people sort of made me feel like it would be a very big difference. And I got told things like they will eat you alive and sari company to lalla company hoti hai. And that kind of language was there. And it was especially there because everyone knew that I had not lived in India or worked in India, right? My work experience is the US and I've grown up abroad. So I heard a lot of this when I moved and when we were selling the business, etc., etc. And I have realized, having done both stints, there's actually not that much difference. In my head, actually, and the way I operate, I don't wake up thinking, oh, I'm an employee. Oh, I'm an entrepreneur. Like, life just doesn't work that way. You don't operate that way. I run Edelweiss AMC as if I own the business, and obviously I'm incentivized that way. And I ran Forefront as if I run the business. So I think if you're building a good quality business, and if you have your soul into building the business, I don't think it's linked to how much ownership you had or whether you were the co-founder or the CEO. I think entrepreneurship is an attitude. It's a state of mind.
No, absolutely. I think the question is who you are answerable to, right? So at some level, as an entrepreneur, as a leader, you're answerable to yourself before you're answerable to anybody else, right? But, at Edelweiss is a listed entity. At some level, there is external stakeholders involved. Whereas in Forefront, you probably had a lot more latitude in terms of how you could do things. So, and plus it's a mutual fund, which is a whole different ball game compared to an AIF or a PMS structure. How did that work out?
Okay, so I'll come to the mutual fund bit separately because I think there are 2 nuances to the question. The first nuance is about who you're answerable to, and the second is the stakeholder bit. Now, apple to apple, I think, people always say that if you are an entrepreneur, you are your own boss and, et cetera, et cetera. I've heard a lot of that. I don't think that's necessarily true. Firstly, I think in this day and age, in the world of asset management, we're not in the proprietary trading business. Our first boss is clients, always has been. At Forefront, I think, even if I didn't have a boss, I was very answerable to distributors. I was very answerable to investors, and you're always answerable to the regulator. So, in fact, I think in an entrepreneurial setting, because your day-on-day salary depends so much on those customers and distributors, I felt more answerable to them than I have ever felt. The second is, I think, one of the reasons that we chose to sell the business to Adel. And people always think business sales are about valuation. And while that is important, was culture. So Adel that way is a very, very free culture. We have budgets, we have compliance rules, we have oversight, but we really are very free to do what we want. I probably haven't shared this before, but many people know that in Adel AMC, we were the surprise winner of the Bharat Bond mandate.
That's right.
Me and my immediate boss knew about that Bharat Bond mandate. I think Rashesh got to know about it on the day we won the mandate. And I told
Amazing, really.
and that is the kind of freedom and flexibility. And he was all supportive. And I remember telling them from Delhi that, listen, we've won this mandate. You're going to read about it in the media. And he was in one of our offices, I think, and he was announcing it and he was celebrating it. But that's how we've always been as a culture. We've always been given a lot of freedom and flexibility to operate, which is why I think 8 years has happened. Because I don't think when I was joining Edelweiss, I don't think I planned or thought that 8 years would happen. Now, there is a second important point, which is a mutual fund point. Mutual fund has a very large degree of stakeholder management. If I was running it standalone, it would be the case. And if I was running it here, it is a public business. And we have a program called CEO for a Day for our teams, and we nominate some people. And so, some of my employees from branches, etc., they were asking me a question in this, and they were like, so what do you do all day? So fascinating. And I said, a lot of it is stakeholder management. So you are answerable to a board, you're answerable to trustees, you're answerable to consumers, you're answerable to distributors, you're answerable to the media, you're answerable to your employees, and everything is disclosed. I mean, just everything is out there, right? Your NAVs are public, they circulate on WhatsApp, your positions are public, your compensation is public. Now where you're going, everything is out there in the public eye. So you're managing public money, and you're answerable to the public in anything. So that is a huge level of responsibility. That I have to say is a very large level of responsibility. But I've told Rashesh in many reviews, I'm also very happy for that, because it gives you a lot of exposure in the CEO role at a very young age. I don't think many industries in financial services give you this level of exposure.
Absolutely. I think you would be among the youngest, if not the youngest AMC CEO in India, at least at this scale and size. So that is incredible. But Radhika, let's go back to the forefront time, right? I remember 2009 or 10, we had this, and back then at IFL Wealth, we were a small outfit, and in a small, tight conference room, you and I think Nalin was also there. You had pitched the forefront concept to us, and it was like, wow, man! Finally, hedge funds are coming to India. This was right after the, I think 2008-9.
This was right after 2008.
How was that? How was setting up forefront right after the global financial crisis, and in a new asset class? Investors are probably shirking away. All of this is mumbo jumbo. Those kind of things happen right after a big crisis plays out. So how did that work out for you?
So I think when we were starting Forefront, Sandeep, as I said, we were so young that we didn't overthink the journey. And frankly, we had the good or bad is we had no idea of what is going on in India. I remember when we were taking this decision, the decision to move in itself from the US was such a large one, right? You've never lived in this country, you've never worked in this country. Funnily enough, by the way, our first dream when we wanted to come back was to run a mutual fund. And then we looked at SEBI's capitalization requirements and we were like, this is not going to happen. So back then I was thinking that, we want to run a mutual fund one day. That was the original wish. Back then there was also no AIF. So we settled upon PMS and then we started. And I have to say the folks at SEBI were super helpful. Even when we were in the US, we were asking them questions on how to set up, etc. And then we came back and we met them. They were so encouraging. They actually made it feel like it was going to be super easy to get a PMS license. And we actually, the timing said 21 days. We got ours in 16 days. It was
That's amazing.
unbelievable. So I think we were, we didn't think financial crisis, we didn't think meltdown. In fact, we were starting a PMS business. And I think one of the first months, my father-in-law made us meet a very senior ex-financial services CEO. And he told us two prominent AMCs had shut down their PMS business. And my father-in-law thought this would discourage us, and we didn't care. We just had this thinking, jazba hai, hame kuch karna hai. I think at that age and stage, you don't care. So you don't think all these macro thoughts that I probably would think if I had to do this today.
Amazing. But let me actually then, that's interesting. You said you never lived and worked in India, and
Now,
you had to set up a new entrepreneurial venture for India. How did that happen? Like you were, I think, summa cum laude at Wharton, like the top dollar payouts probably on Wall Street. Why would you come to India?
because young people are hungry to do something. I went to a school, so I'm the daughter of a government official. Nalan's father is a professional. Incidentally, and I don't know what drove us to come back to India. It was a lark. You wanted to do something. Now, when I reflect back on time, a lot of my classmates are industrialists from Wharton.
Yeah,
You would know many of them.
yeah,
Perhaps that, and at that point, a lot of them were coming back to India. Now, comparison is the stupidest thing to do in life. And I've realized later you should not do it, but in this case, it worked out well. Perhaps that drove the instinct. This was also, you remember, 2005, 6. There was that whole bull market and BRICS euphoria and India euphoria. People were, I mean, it just felt like the place to be, right? So I think all of these things put together. And then, my father had in a couple of passing conversations after I graduated from Wharton, he said, someday na wapis, you can't be brain drain of India. You have to come back. Now, no one explicitly told us come back, but I think some of these things feed your subconscious, right?
right. And so much of that environment feels very familiar right now with where we are. But I'll come
Yeah.
back to markets bit in just a bit. You know, at forefront, you were evangelizing a new asset class almost. Like people would push back and say कि बहुत exotic hai. And even as wealth managers, we would think about that. In today's environment, where suddenly a new spate of asset classes which wealth managers are struggling to wrap their heads around. So there is crypto, there is NFT and all of that stuff. But how was it? How was that experience of explaining and educating people about what an AIF first to begin with is, and then the strategy of long shorts and all of that stuff? Did distributors get it? Were they open?
You know, I have until date, we haven't stopped, even in my mutual fund role, we haven't stopped evangelizing new things. And I'll give you some examples. So that journey fundamentally continues today. I don't know why I've become the evangelist. So incidentally, and I'll come back to the long short example, when Bharat Bond launched,
Hmm.
we were the evangelist for debt passives, right? And target maturity funds. And I was just writing an article on this. Cut to 2 years later, and everybody is launching passive fixed income funds with target maturity. And we are feeling very happy because we were the first ones to find this word target maturity to explain the concept at the time of Bharat
That's
Fund.
right.
So the team is feeling really good about this. So I think evangelizing a new asset class has come. The same thing with international investing. We started talking about this in 2017 because we inherited those funds from JP Morgan, and now everybody is launching international funds. So this evangelization of new asset classes has been, I think, has never left us, and maybe that's a good thing. I think then and now people do listen. I think now people are a lot more open then. Then there were very few people who were very forward looking. So, and also remember, as you correctly said, 2008 had just happened. People were very skeptical of things that were complicated. In fact, in that sense, I think Forefront was a few years ahead of its time. So things like quant investing, which was how Forefront started, or long short, which are all big things today, they appeared very, sudden. It also depends, Sandeep, on who it comes from. I think if a big brand goes out and endorses the same thing versus three young kids, obviously you
Yeah.
don't carry the same credibility. So, even today, and Edelweiss AMC goes out and does international investing versus the largest in the country goes out and, does it. that lends a certain degree of credibility, and it actually is the market, which is all good for all of us. But I think people gave us time. So what would happen a lot then is people would listen to the idea, they would see the track record. A couple of guys gave us seed capital at the time, and I know who they are, and till date I'm eternally grateful to them, because we started the business with 25 lakhs in AUM, which was the minimum at that time. You collect all your friends and family money, and that came to 2 crores, and then friends and family stopped.
Yeah.
And about a year into it, we had 2 crores of AUM. And then 1 or 2 distributors came on board, and they gave us a chance with a couple of their clients, because they saw the energy and the enthusiasm. They could afford to take a risk. And then the journey sort of took off. We also learned, I think, a lot about product structuring in the first few years. I think our first few products came with a lot of arrogance and inexperience of not knowing any consumer. See, we were investment professionals. None of us had done a bit of sales in our life. The last few products of Forefront Capital, and then finally what we built with Edelweiss when we started the business, were a lot more evolved. So I have learned product design on the ground. If you ask me the strength of even Edelweiss AMC today, it is product design. We think of products a little bit ahead of the curve, and we think from a very consumer lens. I think that has come from 6-7 years of really struggling with this. And the good thing about Forefront is we had the time to go sell. So I was selling directly, right? So I would go to Calcutta for one of our event PMSs and meet 10 customers a day, and like eat lunch in Bada Bazaar on the way and catch a taxi and like be exhausted at the end. But that teaches you a lot, right?
Yeah, absolutely. No, even at Dezerv, one of the things we are learning is you just have to get the product out in the hand of the ultimate user, and then they take over and start shaping it for you. Like, it becomes so much easier, and which is why getting the product out of the door is one of the first most important things.
And you have to get something. I keep telling my team, you don't have to build Taj Mahal in day one. I mean, even, we're building some digital products, and I was telling my tech team, it doesn't have to be perfect on day one. It fundamentally will not be perfect on day one. It's not a monument, right? It's a work in progress. So that's something I keep telling. It's important to ship. I started my career as a coder/technology person. It's important to ship one version. I mean, just as when you're writing, it's important to write one version, because then it takes a life of its own. But if you don't write one version, then nothing moves.
No, I have to confess one thing actually, is that as somebody who's been in the industry for a long time, the weight of the reputation can be overwhelming. So, you're like, how can I share? How can I release this product? Like, how will it look for me? And sometimes, which is why for experienced founders, that gets in the way of getting the product out of the door. But yeah, great advice. But, and going back, cutting to 2014, you decided to sell Forefront to Edelweiss. What was that turning point where you said, ki chalo, abhi now let Edelweiss take this over and I'll join Edelweiss?
Okay, so I mean, it was a long process. We thought about who we were going to sell the company to. We wanted a larger platform. And we spent a year making the decision. We met people bigger than Edelweiss. We met people smaller than Edelweiss. I've told Rashesh and Venkat, I was very arrogant about not meeting Edelweiss at first, because I said, these guys are too aggressive. That's the market reputation. And I told the banker, I was like, there's no way we're going to meet. But when we met, incidentally, I was like, wait, they're just like us. This is going to work. And I think, see, what you have to realize is a financial services sale is very different from a sale in technology or consumer products. In many of those businesses, you buy or sell a good or a product or a platform, and you as the founder exit. In financial services, your business, our business, people are buying in part the reputation. So you aren't necessarily continuing as an employee for 3-4 years after. It's true of most of these deals, certainly in money management. And so money is important, but cultural fit is equally important. And one of the nice things is, Rujan, who did the deal at Edelweiss, said it is very much a partnership. It will work. It's not an acquisition. Acquisition is like X, Y. It can't be like that. It has to feel like a partnership. And that's ultimately why we made the decision. And the fact that both Nalin and I are here 8 years later, I don't think, so people kept saying, oh, you guys are going to quit in 4 years. What's the duration of your earnout? You're going to quit in X years. Fact is, the earnout was a 4-year duration. We're sitting here 8 years later, right? So it wouldn't have worked if it wasn't cultural. And I've done enough M&A in life. We did the JP Morgan deal, which I ran. M&A works if the cultural fit works.
Radhika, let me just now go deeper into this entrepreneurial thing. And today, as an entrepreneur, you're supposed to read Blitzscaling by Reid Hoffman, Grow Fast. There is Play Bigger. There is all of this stuff around accelerated growth, right? And that's a really tough conflict, especially in financial services, right? Where you're managing people's money and you feel responsible for what you're doing with that. What's your advice to entrepreneurs on this whole grow fast, fail fast, break things story?
Okay, so before I say anything, firstly, I'll say I am the most impatient person on planet Earth. I understand the hunger for growth. If you walk into the office of Edelweiss Mutual Fund, there is a big wall with money plants all over it that says growth. And I believe Indians, and especially young Indians, are born for growth. The only thing that is, life is tough in India, but growth is exciting. In the US, we talk 5-10% growth rates, and we're like, it's exciting. India is 50, 100, multiples. This is a growth is a drug. So, firstly, I love growth. I get growth, and if you ask me my biggest weakness in life, and I can't say coffee, I'll say it's impatience. I'm extremely impatient. That's it. I think you have to build a franchise that is quality. And if you can do it while growing really, 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 really fast, then by all means do it. But you have to ask yourself in this rush for valuation, what embedded business value are you creating? I wake up every day knowing that I run a brand that manages common people's money. I also happen to be on social media and reasonably known on social media. And I know the kind of messages that people write to me. I'm doing my first pocket money investment in Bharat Bond. Because I've read 2 of your tweets and I trust you, I'm going to make an investment for my daughter. And believe me, I'm not saying it. I take that responsibility, and we as Edelweiss AMC take that responsibility very, very seriously. So when we launch a product, we have a very thorough checklist of why we will and will not do something. And we launch much fewer products than our peers, even at a time when NFO season is happening, because we say that the product has to meet a genuine consumer need. It has to achieve a certain scale and size, and we have to be good at managing it, because there are things other people in our competition do well, like credit risk funds, which we are not capable of doing well, and we're very happy to say no. We also like to launch things where we have the opportunity to be a little different. So everyone's talking passive investing, but we don't want to be the 50th guy launching a Nifty index fund in the country. I mean, why should we do that? We don't.
What value addition is there in that?
What are we doing? So we have a very detailed checklist, and the consumer is very much at the heart of our vision statement is providing investment solutions, but solutions that deliver enduring value. And I think that's to your point, that in this rush for growth, don't forget that concept of enduring value. Because every business, and we are sitting in peaks of bull markets, is going to go through up cycles and down cycles, and this frenzy will end. If you build a business that is sustainable and grows sustainably, you will lead a much less dramatic life, and that's what I've seen. So again, statistics I've not shared ever in the context of Edelweiss AMC. In the last 4 years, we have never had a month of negative net equity sales. Never. And the industry bled last year. We've had flat months. We've never had a negative month. We built a fixed income book because we never ran after liquid funds. That is very, very stable. So people keep saying your quarterly numbers are good because we raise stable long-term money, and we forgot the fight for liquid funds because we're like, kya hoga hai? They grow and someone gives us money in liquid and it's okay. But we focused on building something that is for the long term. And this year we're having one of our finest years in terms of equity sales, but we haven't done an equity NFO for the last 3 years.
That's amazing, actually, with 12, 13, 14,000 crores being raised per NFO.
Yeah.
But
And we don't want to. And I genuinely believe if you do things that are right for the consumer, see, there are things that bigger brands can do when they're backed by banks, and they should do them. I'm not taking away, but we can't do them, right? We don't have the ability to raise 12,000 crores in an equity NFO today. So we have to be the best version of what we can be, and they have to cap. Everyone has to bat to their strengths. They're batting to their strengths. We have to bat to ours.
But Radhika, I think you make it sound much easier than it actually probably is at Edelweiss, right? Because I put myself in the shoes of a sales guy in the mutual fund, and
Yeah.
other peer in another AMC is talking about, oh, I raised like 30,000 crores,
Yeah.
particular NFO, combined couple of things, and then everyone wants that number on their CV. It's like a hard communication task as well, I'm sure.
It hasn't been easy, and I will tell you. I mean, and I don't like these words, large AMC, small AMC, etc. In our industry, because league tables are such a big deal. In any case, the more emerging guy has it tougher. In fact, in 2017, when I started, and today there's a lot of warmth about new AMCs. Oh, ex new AMCs coming is going to bring a new approach, and they're going to be digital, and they're going to be passive, and all this stuff is happening.
Yeah.
17, and I keep joking with, I think even Swaroop Mohanty about this, when all of us were starting our journey, there was no kind of hype and love and media and all around us. We didn't get this kind of debut. Now people are getting like Star Kid kind of debuts. We didn't have that kind of debut at our time. It was just a very vanilla debut. We just came in, and I don't come from this industry, right? So in that sense, yes, it is not easy. One of the things is the composition of our team is slightly different. If you look at the people in our team, they're on average younger, and they come from slightly unconventional backgrounds. So, a sales head has probably never been a sales head before. He's run zones, but he's not done that. A marketing head has never done marketing before. So people come from slightly different and unconventional backgrounds. So, we live a little bit in our own bubble, and that helps. Because otherwise you can drive yourself crazy. This is a very, very competitive industry, very fast paced, and everyone has every information about each other. Every day you know your competitor scheme by scheme what his AUM is. So if you want to compare, this is a lifetime of unhappiness. I mean, you can just drive yourself bananas. And Sandeep, I'll also say the current state has not been automatic. I think we have made our set of grapples, mistakes in 17, 18. We have figured out what we can do. We've figured out what we can't do. So not to say that we won't make mistakes again, but we have a little more self-confidence. This is what we want to do, and this is what we don't want to do. And I think success adds to self-confidence also.
But when Radhika says chappal ghiso, how do people react to that? Like, nobody wants to do that. It's like the age of dopamine. You want instant gratification. You want everything at your fingertips. How do you convince people that both within Edelweiss and then for their own careers, because you're a social media star, how do you, like, that is the approach to go with your careers as well?
Yeah, and so chappal ghiso has become thoda sa popular, but it's actually, so I credit the line to my boss in 2000. This is a good one for entrepreneurs. I think in 2017, 18, and some of these boardroom conversations, everyone would ask me, and my boss Hemant at that point, what is your edge? And business boards are asking this question, what is your edge? And you're sitting here and thinking, yeah, what is my edge? Products are commoditized by SEBI, pricing is I mean, what is my edge, right? And so at some point, Hemant said, he's like, hum chappal zyada ghisenge. We'll just work harder than other people. We'll go out and sell with more fervor. We'll design products faster. We'll file with SEBI quicker. We'll get our ad campaigns out sooner. We'll take customer calls. We'll work the longer hours. This will be our edge. And I really believe execution can be our edge. And so in one of the town halls, we have quarterly town halls, I actually had a picture of a high heel, and I love to wear heels, that said chappal ghiso, and that was sort of ingrained in the DNA of the organization early. So chappal ghiso is something that is very, very core to us. And I actually in pre-COVID times, Sandeep, changed 5 chappals every quarter, because I used to travel so much that chappal genuinely gis jati thi. It's a running joke that every quarter I run out of 5 pairs of heels, and my husband knows I'm going to buy them. So COVID is the period, like I'm the classic customer for shoe stores. So that's how the narrative got shaped internally. It's when you're looking for an edge, you don't have bank distribution, you don't have some crazy digital presence, you don't have some crazy digital brand. But hard work can always be an edge. And I think gradually that is the narrative that people have bought. It was a lot easier, more difficult in 2017, 2018. Gradually, people have also realized within the organization that if you work hard, things do start to move. The rewards of hard work are not immediate, but they start to show up later. That one IFA you had a conversation in 17, who never gave you any attention, may end up giving you a 20 crore check when you're sitting there in 2020. We also provide our people a lot of internal growth. That's a stated strategy.
How do you do that? Like what do you mean?
Every role, the first choice is an internal talent. If we can. So head of Bombay sales was a very good RM in Delhi. Recently, we had one person move out of a key accounts role, moved an internal guy, gave a Bombay banking head role, which is a very big role in a mutual fund, to a very young guy who actually joined us from our agri business 2-3 years ago. Gave a chief operating officer role of an AMC to someone who has never been in the EMF industry, younger than me, young woman who's younger than me. So that is, our choice has always been use an internal talent, even if they're 70-80% of the external talent, because that's how you will get people to stay. And we've hired people of that DNA. So there are certain places, there are certain people that come to us and tell us, I work at XYZ, how will I work here? Because at XYZ, brand पे पैसा आ जाता है. And I'm like, यार यहाँ तो चप्पल घिसनी पड़ेगी पैसे लाने के लिए. You'll have to work really hard at everything, and you won't have everything on a platter. So we attract a certain kind of people.
And the chappal ghiso is actually like an extension of this whole compounding thing, right? Like you keep doing it and it builds over a period of time. And I think that is a very true sort of thing for investing also. Recently, I was watching this show. I love it. It's Ted Lasso. It's about this. It's on Apple TV, American football coach who's coaching in the UK. And he says to one of his, players that be a goldfish, which is forget. And I was like, yeah, so I've heard this before. Like I've read this before somewhere. And then was Radhika's thought on be a goldfish investor. So are you a goldfish investor?
So I have to tell you the goldfish thing. I am a very goldfish investor. I'm actually a deeply goldfish investor. But the goldfish thing that became popular, actually, I was reading Ruskin Bond. Someone had sent me some Ruskin Bond books, and I love to write. So I had great disrespect for goldfish till I wrote that story, because I had grown up in a culture where I thought goldfish were stupid animals because they just roamed around the bowl and did nothing. And I read this Ruskin Bond thing about this goldfish and cat story and how a cat agitates a goldfish, and the goldfish doesn't get agitated and the cat goes away. And he wrote, he's like, I respect the goldfish because goldfish are never agitated. And then I realized, there's something to learn from everybody, because in today's market, there are so many reasons to be agitated. In today's life, there are so many reasons to be agitated. Forget markets. There's news, there's media, there's social media, there's WhatsApp groups, there's this, there's that. As an investor, you have 5,000 reasons to be agitated. If you can just tone down, that'll be good. I'm actually a total goldfish investor. I'm a very boring investor. I do SIPs in a certain set of mutual fund schemes. In March 2020, I didn't even look at my portfolio because I know what is going on. And I'm also a very fiscally sensible investor. So I'm a total goldfish.
But tell me, Radhika, how does that pair with being a hedge fund fund manager? Like, isn't that at odds with it? Because there you're looking for like immediate short-term opportunities, and here is a very different approach.
So I haven't managed money for years, but even in my hedge fund days, and the myth around hedge fund strategies is that we largely do intraday trading and very short-term stuff. Even what we do on the hedge fund side, incidentally, and this has been a conscious choice, we've experimented with everything on the hedge fund side also, is a lot more long-term. So we are doing long-term equities with some amount of shorting fundamentally broken companies. And it's not companies that are broken on a one-day basis, companies that are structurally broken over 3 years. We are doing pre-IPO work, which is fundamentally long-term. That brand, one of the things that we decided we consciously don't want to do is very short-term hedge fund investing, that liquid plus wala debt plus market. We just don't do that anymore. So
Right.
even our investing in most things has become long term. I mean, as I said, my fixed income book is long term in an industry where largely people do short term fixed income. I think life is better when there's less volatility.
And so if you had to give like one insider tip to people who are not from the investing space about their portfolios, what would it be?
I think do what works. And this is the most boring, it's a total goldfish tip, but do what works for you, because there is such a FOMO tendency to do something because someone else is doing it today. In today's social media age, he's buying index funds, so I should go buy index funds. He's buying international funds, so I should go do it. My brother's asset allocation is like this. My friend recommended this. I think investing is very personal and it has to make sense for you. And you will know if it makes sense for you. You're a good investor if you can be a goldfish with your investments, if you don't need to look at them every day. If March 2020 happens and it's causing you a huge amount of stress, it's changing your lifestyle, it's causing fights at home, it's causing a fundamental shift, then you probably have made some mistakes in asset allocation and risk appetite. But if you're living through that with some discomfort of a goldfish, maybe little gas, okay, it's March 2020. But if you're able to get through that comfortably, then I think you've done your allocations right. So I think that is my advice. And most people I see are fairly agitated. I went to a session, interestingly, yesterday on mental health for children, because a lot of my friends have kids in their teenage. And a lot of household problems, funnily enough, the doctor was saying, have come in the COVID period from financial problems in the family that have percolated down to bichara children. And that is
the lasting impact in some cases, right?
That is the deep impact. You plan money badly, you don't allocate right, you have business losses compounded by investment losses. They cause stress in the family that is leading to mental health issues at home. We don't realize the sort of lasting ripple effects that these things have and are having. And it's an eye opener. So really do what gives you a good night's sleep. My favorite product on earth is well known to be balanced advantage fund. And till date, people ask me, oh, I'm a long-term equity investor. What is this nonsense about BAF? I don't need low volatility. The fact is, life is pretty high volatility. There is a space for a low volatility sort of existence in life.
Yeah, no, so we tell people, right, create a portfolio that if it falls X percentage, you can live with that and then decide what the portfolio allocation should be. So, but Radhika, thank you so much. Very few times do we have a CEO, an entrepreneur, a social media star, a content creator, all at the same time in one show. And this has been one of those. So exceptional talking to you. We've learned a lot. I'll really take away the goldfish thought, and maybe that's what we'll call this show then. Thanks so much, Radhika. Thanks for doing this for us.
Thanks a ton, Sandeep. Pleasure talking to you.